So let's begin. Managing the risk of financial crime. Here's a quick summary about what we should be expecting in this chapter. We are going to cover the concept of money laundering and terrorist financing and the difference between them, the stages in money laundering, the role of international agencies, most importantly FATF, or the Financial Action Task Force, the role of predicate offenses, which are the offenses that give rise to money laundering, and the role of financial services in financial crime. How do criminals take advantage of financial services companies? What can financial services companies do to reduce the risk of money laundering happening through them? So let's continue. The concept of money laundering. Money laundering is turning dirty money to clean money, or dirty property to clean property, or dirty assets to clean assets, so that this money that you have obtained illegally will now look as if it's legal money. So money laundering offenses are these activities that contribute to the process. It can be actually doing money laundering yourself. It can be helping, being part of the money laundering process. It can be hiding or concealing it, even though it's not your money, but you're concealing it. It can be tipping off, for example. You tip off the criminal that they might be investigated by the police or by the bank. All of these are offenses linked to money laundering. So it's not just even arranging for that contract, for that money laundering transaction, even if it's not your money, arranging it, hiding it, facilitating it, tipping off are all part of the money laundering process. Terrorism or terrorism financing, there is a clear connection with the money laundering in it. Now, quickly, what is terrorism? Is the act of terrorizing people and countries, usually done for political or religious reasons. Terrorist financing is the act of providing, either providing money directly to terrorists or facilitating or arranging for the funding of terrorism. Sorry. So we need to differentiate between these two. Generally speaking, when it comes to regulation, whether it's the international regulation, FATF, the UN and such, or it's local regulations, you'll notice that most regulation that comes out for money laundering, it's usually linked with terrorist financing. But they do have some little differences between them. The difference is terrorism usually have smaller sums of money. So before, when criminals, when banks or transfer agents used to filter out money laundering amounts, they used to usually look for any amount that is above $10,000, for example. That's for money laundering. But the problem with terrorist finance, it requires a lot less. I think the London bombing that happened a few years ago, they discovered that the transfers were done at around £500, £1,000. The second difference is that terrorist financing might use actual legitimate funds. Money laundering has or is based on illegal funds. Terrorist financing can use legal or legitimate funds for terrorist finance. And that's why it's difficult to track, because the money that this guy or this person is transferring to the terrorist organization might actually be clean money. And usually governments go after dirty money or illegal money. So who is the global body responsible for standards and international controls of money laundering and terrorist financing? You've guessed it, it's FATF, the Financial Action Task Force. Internationally, the EU, since it's made up of multiple countries, the EU has the money laundering directives, usually written like this. The fourth directive was written as fourth MLD. Now I think they're in the sixth directives. These are constantly being updated. Of course, I think the sixth MLD started to consider cryptocurrencies and their use under money laundering. So what are the three stages of money laundering? I'm pretty sure you've done this many, many, many times before. So I'm going to cover it quickly now, and then I'm going to give you a question. Let's see if you can guess that answer. It's a question from a CISI exam. So the three stages of money laundering are, first stage is placement, and this is when the criminal places or deposits. I'm going to write deposit here, but that's not the right answer. So if you see in the exam deposit as a stage of money laundering, that's not correct. The official stage is placement, which means deposit. So the proceeds of any crime are placed into a bank, a building society, insurance, a brokerage, a fund, any financial institution. So you've got these illegal activities, or what we call predicate offenses. So these are offenses that give rise to illegal money and money laundering. They are deposited into the financial institution, which can be a bank, an insurance, a brokerage, a fund, any financial institution. The second stage is when the criminal starts to move the money around, usually by either buying and selling of investments or by transferring between different accounts. Basically, what he's trying to do is he's trying to cover the audit trail. He doesn't want that dirty money or illegal money to be linked directly to him. That's layering. And now that the money has been transferred around and it now looks clean, he will integrate it with the rest of the legitimate income that he has. And that is called integration. So, and before we give you an example, let's just go through what a firm is required to do according to international standards. A firm is required to identify customers and suspicious transactions. Of course, identify customers, we're talking about CDD and KYC, which we are going to cover in more details later. And suspicious transaction reporting, that means report any suspicious transaction you have to your MLRO if you're an employee, or to your legal enforcement agency in case you are the MLRO. The second thing you are required to do as a firm is to keep proper records, usually for a number of years, 5 years, 7 years, 10 years. You have to monitor your transactions and you have to report suspicions. Now, report transactions, and I would say here, since this is already part of it, I would say train your employees. Employee training is a big part of a firm's requirement. Keep records, transaction monitoring / have internal controls. Training your employees and having internal controls are critically important when it comes to fighting money laundering. So you obviously have one question or two questions on money laundering. It can be either on the stages or it can be on the requirements on a company. So here's a quick question. Let me see if you're going to get it right. You could give me your answers in the chat room. So after transferring amounts between different unknown accounts in multiple countries and buying and selling different financial instruments in different capital markets. So what stage of money laundering is this? So of course, this is actually a question in the exam. You've got A, B, C, D. So you've got the placement, you've got the layering, and then you've got the integration and then you've got another one which has nothing to do. So what do you think your answer is? So let me have your answers, please. So, so obviously the answers are mixed between layering and integration. I'm glad we all agree that's not placement. Good. We all agree that's not placement. The answer is actually integration. Now, even though all of this is actually layering, you have missed the very first word, and that is after. So watch out for this in the exam, please. You will get a question which is 3-4 lines long, and by the time you end the question, you've already forgotten the very first word. So you've forgotten that it says after. So what's after layering? The answer is integration. If you're taking this qualification, I'm pretty sure you've taken CISI qualifications at a certain period in your career in the UAE. You need to read every word of the question and you need to read every word of the answer. So, thank you. Moving on. The role of international agencies when it comes to fighting money laundering. You've got the UN ODC, or the Union Office on Drug and Crime, the IMF, the World Bank, which has partnership with the UN ODC, and the Financial Action Task Force, which reports to reports to the UN, I think, through their UN ODC office. So let's talk about each one of these. Let's start with the UN ODC. So the United Nations met in the year 1999, 2000, and they decided on some millennium goals. Some of these were the Millennium Development Goals, like eradicate poverty and reduce crime, stuff like that. One of them is to reduce crime, fight all international crime. So the United Nations assist members in implementation of AML procedures. They send usually people to teach you. Seizing and confiscating criminal assets. This is called the STAR initiative, which will cover stolen asset. What's the term for it? Stolen asset recovery. And this is when usually criminals, which usually politicians, when they steal the assets of the economy, of the country, of the government, they don't care, because there will come a time they will retire, they will go enjoy their assets overseas. So STAR, through a partnership, which is a partnership between the UNODC and the World Bank, they make sure that whatever you steal will be returned to the country that you stole from. Legal and technical processes, which are clear. The IMF pretty has a universal membership. That means most countries around the world are part of the IMF. It's a forum to share information and develop common standards and practices and policies, The IMF confirmed that there is a need for us to have some AML/CFT. CFT means combating the financing of terrorism assessments. And the IMF has a fund, which is basically a donation from multiple countries, usually rich countries. And that trust fund is usually used to provide training and technical expertise to countries that need that. So the IMF would say, hey, look, Kenya, look, or India, please, you have to do something about money laundering. You have to strengthen your controls. So they would say, fine, help us. So the IMF would send them technical expertise, they will cooperate, and then they will improve their regulations and they will improve their policies. The IMF is known to be a tough organization because they usually lend. You'll have to return that money with interest. The World Bank, on the other hand, is known to be a bit softer, a bit nicer. The World Bank does give loans, but many of the amounts that it gives are usually grants and donations. It's quite known for the International Bank for Reconstruction and Development. Usually for war-torn countries, the World Bank will step in and then help with the reconstruction. You have the IDA, the International Development Association, grants loan to emerging markets. Usually these loans are given to improve their capital markets, to improve their logistics, to improve their ports, to improve, basically help them improve and grow their economy. The World Bank, with the partnership of UNODC, there you go, it's here, has created the Stolen Assets Recovery Initiative. Assets stolen by corrupt politicians will be returned to the country even after the the retirement of that politician. Most of these politicians, the corrupt politicians, the assets that they steal are usually invested, or they usually are bought overseas, in Europe, in America, Latin America. So the STAR initiative basically says whatever that asset is, it has to be returned to the country. We will take it from the criminal. You can just go to the World Bank website, just Google STAR or the Stolen Assets Recovery Initiative, and you will see the list of assets that have been returned. I think the last time we checked it, the very first one was Gaddafi's son, I think, at that time, but that was a while ago. So they showed you, I think he had some assets in one of the European countries, and those assets were returned to Libya.